Hey everyone, welcome back to another video. My name's Sam and today we're diving into something you definitely need to know before investing in one of the world's most famous tech companies, Apple. Whether you're new to investing or have been in the game for a while, there are a few key points to consider before adding Apple to your portfolio. As always, feel free to leave any questions or comments down below and stick around until the end for some valuable insights. Let's jump into it. Apple isn't just a brand, it's a global powerhouse. But before you hit that buy button, it's crucial to understand Apple's business model, financial health, market trends, and the risks involved. Today, we'll break it all down so you can figure out whether investing in Apple is the right move for you. First up, let's talk about Apple's business model. Apple is best known for its hardware: iPhones, Macs, iPads, and the Apple Watch. But did you know that services now account for a significant portion of the company's revenue? Apple has strategically shifted towards offering digital services like iCloud, Apple Music, the App Stores, and even Apple TV+. This shift helps the company diversify its revenue streams and create a more stable, recurring income base, reducing its reliance on hardware sales alone. Apple also has a loyal customer base. Once people are in the Apple ecosystem, they tend to stay, thanks to how seamlessly the devices and services work together. This customer loyalty and brand strength give Apple a major competitive edge in the tech industry. Next, let's take a look at Apple's financial health. Apple is known for its strong financial position with consistent revenue growth, massive profit margins, and a huge cash reserve. Over $200 billion at times. This gives the tech giant the flexibility to invest in new technologies, buy back shares, and pay dividends to investors. Their quarterly earnings reports are often market-moving events. Investors pay close attention to metrics like iPhone sales, services growth, and international performance, especially in key markets like China. However, Apple's heavy reliance on iPhone sales can be a double-edged sword, making the company more vulnerable if demand for its flagship product slows down. Apple's financials are also boosted by its efficient supply chain and its ability to maintain high profit margins, even with premium pricing. When you're thinking about investing in Apple, you've got to consider the broader market trends affecting the tech sector. First off, tech companies are increasingly moving towards subscription-based models, and Apple is no exception. As we mentioned earlier, their services segment is growing rapidly, and this shift towards subscriptions helps create a steady revenue stream, which is great for long-term investors. However, tech is also a very competitive space. Apple is facing increasing competition from companies like Samsung, Google, and even smaller players in emerging markets. On top of that, regulatory scrutiny over issues like privacy and antitrust could impact Apple's ability to operate freely in certain markets. Let's not forget that supply chain disruptions, like the chip shortages we've seen recently, can also have an impact on Apple's production and sales. Being aware of these external factors is key to understanding how they might affect Apple's future growth. No investment is without risk, and Apple is no exception. One of the biggest risks Apple faces is its dependency on the iPhone for a large chunk of its revenue. While their services and other product lines are growing, the iPhone still accounts for a significant portion of their income. If the iPhone were to lose popularity or face major disruptions, Apple could be heavily impacted. Another risk is geopolitical tensions, especially with China. Apple relies on China not only for manufacturing, but also as a major market for its product. Trade tensions, tariffs, or political conflicts could negatively affect Apple's supply chain or its ability to sell in one of the biggest markets. Lastly, the tech sector is volatile by nature. Stock prices can be influenced by everything from new product launches to broader economic conditions, so it's important to be aware that Apple stock, like any tech stock, can experience significant fluctuations. Before we dive into Apple's long-term growth potential, don't forget to hit the like button and subscribe to our channel for more videos just like this. Now, let's get back to it. While Apple has matured, there are still a lot of opportunities for growth. Apple continues to innovate with upcoming technologies like augmented reality or AR, advancements in healthcare tech through the Apple Watch, and a possible Apple car in development. Additionally, the company's focus on sustainability and green energy initiatives could help it tap into new markets and further strengthen its brand in an increasingly eco-conscious world. Investors looking at Apple for the long term might find these initiatives particularly exciting, as they could fuel the company's next wave of growth. However, it's important to remember that these innovations take time to materialize, and not all new ventures are guaranteed to be successful. To summarize, before investing in Apple, it's crucial to understand its diverse business model, solid financial foundations, and the market trends that shape the tech industry. While there are risks, like its reliance on the iPhone and geopolitical factors, the company's long-term growth potential remains strong. And that's everything you need to know before deciding to invest in Apple. If you found this video helpful, make sure to give it a thumbs up and subscribe to our channel. And as always, feel free to drop any questions or thoughts in the comment section down below. And before you go, check out these two videos that we think you'll enjoy. I'll see you next time.